Guys, welcome back to XRP Insider Network, where we connect the dots between global macro moves and what it means for your XRP before the mainstream catches on. Let's get into it. Here's something that should stop you in your tracks. While every major crypto on the board was bleeding institutional money this week, XRP was quietly pulling capital in. Not retail noise, not speculative FOMO, institutional flows. And the reason why is sitting right in front of everyone, but almost nobody is connecting the dots. Today we're going to do exactly that. We're going to walk through 3 converging forces that explain not just why XRP held up, but why this specific moment, right now, may be the most structurally significant turning point in XRP's entire history. And I'll close with the one signal I want you to watch for that tells you when institutions have stopped analyzing and actually started buying. Stick around for that because it matters more than anything else I'll say today. Most people watching financial news right now think the big crypto story is Bitcoin ETF outflows. That's the headline. That's what the algorithms are feeding you. And look, I get it. When you see Bitcoin move, everyone pays attention. It's the default narrative. The assumption baked into mainstream financial media is that Bitcoin leads, everything else follows, and if Bitcoin is struggling, the whole space is struggling. That's the common belief. Here's the contrarian take. That framing is not just incomplete, it's actually backwards for what's happening at the infrastructure layer of global finance right now. The institutions that matter, the ones managing trillions, not millions, they are not positioning around Bitcoin's price action this week. They are positioning around regulatory clarity, settlement infrastructure, and the question of what actually moves money at a global institutional scale. And when you look at it through that lens, the picture changes completely. So let me show you what they're actually doing and why XRP is sitting at the center of it. Let's start with something most people are sleeping on, and in my opinion, it's the most underappreciated development in this entire story. The FDIC has approved a new framework that fundamentally changes how banks in this country can interact with digital assets. Under this new rule, major banks, we're talking JP Morgan, BNY Mellon, every systemically important institution in the country, they are now cleared to custody Bitcoin and to issue payment stablecoins through their subsidiaries. Let that sink in for a second. The regulatory uncertainty that kept the biggest pools of capital on the sidelines for years, the compliance risk, the legal ambiguity, the fear of touching crypto at all, that just evaporated overnight. But here's the detail that separates serious analysis from surface level takes. Tokenized deposits under this framework will be treated like traditional deposits, one-to-one reserve requirements in cash or treasury bills. This is not a loosening of standards. This is the integration of digital asset infrastructure into the existing safety architecture of traditional banking. What that means practically is that institutions can now build out crypto service offerings without triggering the compliance nightmares that made this space untouchable before. JP Morgan and BNY Mellon are not exploring anymore. They are accelerating. They have the regulatory green light, and firms like that do not sit on green lights. They move. And when firms managing trillions of dollars in assets start moving into digital payment infrastructure, you want to understand where that infrastructure leads. Because it doesn't lead to speculation. It leads to settlement. Now here's where it gets really interesting, and this is the part the mainstream financial press is completely missing. Right around the same moment the FDIC was clearing this path, the CEO of Charles Schwab, a man who oversees more than $12 trillion in assets, sat down and made a statement that every XRP holder needs to hear. He pushed back on the idea that 24/7 trading is crypto's killer feature. And honestly, he made a fair point. Less than 2% of trades happen outside of market hours. That's not a revolution. But then he said something that reframes the entire conversation. He said, and I'm quoting directly here, "I do think that stablecoins will likely have a long-term future and become a bigger part of the way people move money around the world." He describes stablecoins as allowing things to move seamlessly across the globe, compared to wiring money internationally, which is expensive, slow, and cumbersome. Now I want you to think about the weight of that statement. This is not a crypto influencer. This is not a retail trader with a YouTube channel. This is the chief executive of one of the largest financial services companies on the planet, validating the global payments use case for blockchain-based settlement. And he said it right after the FDIC cleared the regulatory runway for banks to issue exactly those instruments. You want to tell me that's a coincidence? I don't think so. What Schwab CEO is describing, seamless, instant, low-cost global money movement, that is the exact infrastructure problem that Ripple has spent a decade building a solution for. XRP is not a speculation vehicle. It is a settlement asset engineered for the precise use case that the CEO of a $12 trillion firm just called the future of global finance. And that brings me to the point that closes the loop on everything. The institutional money flows. Because you can talk about regulatory frameworks and executive statements all day long, but at the end of the day, capital is the most honest signal in any market. Where money actually goes tells you what sophisticated investors actually believe, regardless of what anyone says publicly. So let's look at the numbers. This week, Bitcoin ETFs saw approximately $159 million in outflows. Ethereum lost around $647 million. Solana bled over $15 million. These are not small numbers. These represent institutional money actively reducing exposure to those assets through regulated ETF vehicles. And while all of that was happening, XRP pulled in over $3 million in net inflows. Now I know what some of you are thinking. $3 million is small compared to the outflows in the other assets. But that's not the right way to read this data. The question isn't the size. The question is the direction. In a market environment where institutional money is exiting crypto broadly, XRP is the asset that is attracting capital. That is not noise. Retail investors do not move $3 million in coordinated ETF flows. That is institutional positioning. That is smart money making a deliberate, considered choice about where to be when the infrastructure play matures. Think about what has to be true for that to happen. An institution allocating to XRP right now has looked at the regulatory environment and decided the clarity is sufficient. They've looked at the use case and decided the global payments infrastructure thesis is credible. They've looked at Ripple's decade of relationship building with central banks, financial institutions, and payment corridors around the world, and they've decided that positioning now, before the mainstream narrative catches up, is the right move. That's not gambling. That is strategic, long-horizon institutional capital making a calculated bet on where the plumbing of global finance is heading. And here is the thing that I think gets lost in all of the price refresh cycles and the day-to-day volatility. You, as an XRP holder, already made that same read. You looked at the infrastructure story, you looked at the institutional relationships, you looked at the regulatory trajectory, and you held through years of uncertainty because you believed the use case was real. What's happening right now is not a new story. It is the confirmation of the story you already knew. The FDIC just cleared the institutional on-ramp. The CEO of a $12 trillion firm just validated the payments use case. And the money flows are showing that the earliest institutional movers are quietly accumulating while everyone else is distracted by Bitcoin's headlines. Stop watching the price every hour. I mean that with complete sincerity. Price is the mechanism that shakes people out too early. It creates anxiety. It creates doubt. It makes you question a thesis that is fundamentally intact. The price will reflect the infrastructure eventually. It always does. But the infrastructure has to be built first, and the regulatory framework has to be cleared first, and the institutional confidence has to be established first. All three of those things are happening simultaneously right now. That convergence is rare. And the people who recognize it before the mainstream narrative catches on are the ones who position correctly. Here's the signal I promised you at the beginning, and it's actually simpler than you might expect. When the broader crypto market is selling off and XRP is still attracting institutional inflows through regulated vehicles, that is your confirmation that smart money sees something the crowd doesn't. We have that signal right now. Bitcoin is bleeding ETF outflows. Ethereum is bleeding ETF outflows. Solana is bleeding ETF outflows. XRP is taking in capital. In a risk-off environment for crypto broadly, one asset is bucking the trend, and it happens to be the one built for institutional-grade global settlement. Watch that divergence. When it persists and grows, that is the market telling you something profound. The foundation is being set in real time. Regulatory clarity from the FDIC. Validation from the CEO of one of the most powerful financial institutions in the world. Capital flows that confirm institutions are not just watching anymore, they're moving. The pieces are not falling into place someday. They are falling into place now. The mainstream will write about this eventually, but by the time they do, the window that exists right now will have already closed. You're not in the mainstream, you're here, and you already know what they're going to figure out later. The convergence of regulatory clarity, institutional validation, and deliberate capital allocation into XRP is not a theory anymore. It's a documented, sourced, real-time event unfolding in front of anyone willing to look past the Bitcoin headlines. You've been patient. The infrastructure story you believed in is now being confirmed by the most credible voices in global finance. Stay focused. Stay positioned. The validation phase has begun. Mike out.